Hello, my YouTube friends. I hope you're doing well. I hope the sound quality is okay. My microphone kind of busted. Today I'm going to talk about the petrodollar and Saudi Arabia going away from using the US dollar to connect with oil prices and how that could impact our markets going forward. So stick around, should be an interesting video. Good morning. My name is Adam Kahn and I'm the Rational Investor. I hope you're all doing well. Today is Monday, June 17th. It's pretty early in the morning. Family's still asleep. Here I am in Munich, Germany, moving around. I think our next stop is Milan, Italy, but Munich's been pretty cool. It's interesting here in Germany. It's like everybody drinks beer all the time. It's incredible. Everywhere you go, it's just like beer after beer after beer, but it's a beautiful country. We got to tour it around a bit yesterday. Let me get into a little bit about the petrodollar and what's concerning me. So Saudi Arabia decided to go off of the dollar in terms of valuing it to oil. It kind of opened up their ability to accept other, forms of equity in terms of selling their oil, which, to be perfectly fair, makes a lot of sense to them. I mean, why wouldn't they accept other currencies or gold or even Bitcoin or whatever it is that they feel is acceptable to be able to sell their oil for? The problem for us as the US is that by attaching oil to the US dollar, it requires other countries to buy those dollars, keeping the currency strong and keeping us in a position that builds our economy actually by being able to sell the dollars to buy those oils. Now that they decided not to re-sign the agreement and go off of the dollar being pinned to the oil price, it probably creates another reason as to why we're going to see continued inflation. If people don't need to require to buy the dollar can weaken. We may need to raise rates in order to attract people to buy dollars. It's just one more thing along with the spending and everything else that could cause inflation to be stickier for longer, maybe even start to come around again. So how does this affect you? What do you do? What does that do to stocks and other things? The reality is you don't want to be scared into owning dollars. You actually want to own assets, because if this happens and if it continues, it's not going to be something that happens overnight. You're not just going to see some crazy inflation. What I picture is a process over time of continued inflation. Now, during inflationary periods, what do you want is assets. The problem is, I see a continued problem for those who don't already have assets, and a big spread between those who have and those who don't. As assets continue higher, as the dollar weakens, and incomes don't go up accordingly, those who have are going to continue to grow their assets in value, even though the value of those things will be kind of worth less because the dollars you get will have less value than what they do today. But those who don't have will continue to be further behind because the things they want to buy, those assets, are going to continue to cost more dollars as the inflation continues. Now, as stated, this will be a process that'll take a long time. It's not like just tomorrow you'll see some huge inflation. Basically, what I envision is people no longer buying the dollars. That's going to happen slowly and continual. There's no reason now that China can't just buy oil in yuan, or whomever it is that needs oil, or if they come up with a new currency or whatever they use to purchase it. I think part of the problem is the U.S. has overstepped their boundaries a little in some of the things we've done. When you look at the war in Ukraine and the way that we've handled what we did with Russia, this is not my opinion. This is just me talking about what I see. It makes no difference to me one way or another, and I apologize. And again, this is not financial advice, so let me make that clear as well. Please do not make any decisions in your portfolios based on the information I share. You need to seek out a financial advisor or do your own research, or however it is that you do your research. Now, that being said, what I pictured and what I saw was we froze Russia's money. Now we're actually using that money to fight them in their own war. Now, if I understand it correctly, we're using the interest on the funds that we took in, but I think they see this as a big no-no. I also think other countries think that we've overstepped, including Saudi Arabia, which is why I think they're making this step not to re-sign the agreement. And if you're a country like China, or maybe some others that, I'm not going to say you're our enemy, but you're not necessarily our best ally. This is a big concern that if you do something that we don't like, you may, you being the US, we may decide to do something similar to you. So how much money are you going to want to keep in dollars? And why would you want to be buying things in dollars? So my guess is, as they continue to buy things across the world, they'll start using up their dollars until they don't have it, too much of them that they're concerned about anymore. That takes a long time to filter through the economy, which is why I think it can be a long, slow process, and I don't see things really changing for a long time. Now, if you're struggling, this is going to be terrible news, because the reality is, if you don't have the assets that are going to go up as the inflation continues, you're going to fall further and further behind. I worry about unrest, I worry about civil disorder, I worry about crime, I worry about homelessness, and I worry about people really struggling if they don't have family or friends who can help, they can move in with, and things as they continue to get worse. I don't mean to be negative today, and the reality is I'm not negative on the markets. I think you actually want to be invested, whether that's in stocks or whether that's in, even Bitcoin. I hate to say it because I'm not so comfortable with it. I don't know what I think about bonds unless you're doing short term. The Fed's been pretty clear that their next move is likely a cut, but my guess is they'll cut a few times, the inflation will start to run again, and they'll be stuck in a really tough position. It's not just moving away from the petrodollar, it's also that the government's been spending so much, and it's been pretty clear that no matter who gets in office, they're at a minimum going to spend the same, and if the Republicans get in, it's been pretty clear that they plan on spending more. Now, this is nothing I have control of. I have no opinion either way on anybody in terms of getting into office or this or that, more about the economy and how it impacts it. I think you're going to see a boom if the Republicans get in terms of equities and real estate and whatever else, and I think you even may see a melt up. But I worry about that as not being a good thing. I don't want to say it's a bad thing either, it just depends on the position you're in. Now, you also want to be careful not to own equities that have a lot of debt, because if their debt is rolling and the inflation continues through, it's possible that the interest rates might continue higher, and they may be put in a position where their debt rolls into higher interest rates, causing more costs. But if you have companies that are well capitalized, in good position, which fits the Magnificent Seven and some of those others, as crazy and high flying and high price they may seem, they may just continue to outperform and continue to do well because their balance sheets are strong, which is something that's really valuable in a high inflation period. I would also recommend doing your best to stay out of debt, credit card debts, anything like that, especially the high interest ones. By all means, if it's only going to get tougher, and if you fall behind, it's hard to keep up. So do your best to earn a living, pay your bills, and stay ahead. If you can, save, put into the markets, the companies I love, again, not financial advice, the Amazons, the Apple, what great news with they're getting in the AI race. And when I think about it with your phone, once that actually gets implemented and your phone's ability to help you, it really could leapfrog their earnings. My concern about they've been falling behind in terms of their earnings versus their price to earnings ratios. This is going to create a whole new wave of iPhones that people are going to have to upgrade to have those new systems in place. So anyway, I don't know how long I've been talking, a little awkward. People are wandering around. I don't know if they're listening or what they're doing, but I'm kind of talking quietly because I don't want to disturb anybody this early in the morning. So if you haven't already, do me a favor, hit that thumbs up button, subscribe if you haven't already, make a comment, let me know what you think about the economy, and hope all's well. I'll try to post a little pictures of the trip a bit. It's been a lot of fun. Still have Italy next, and then we'll see where from there. So have a great day, and I'll talk to you guys soon.